Okay, so welcome to the India Market Review by Bangalore Investors Club. This is Dr. Musa speaking. So this is our weekly review of the Indian equity markets, looking at what's been happening. So those of you who've been regular on the markets, you will know that last couple of weeks have been really interesting. We've had a lot of discussion about the 7-month head and shoulder pattern which is there, and how that neckline is either getting broken, not being broken, and we've alternatively been very bearish 2 weeks back to very bullish last week, as you know, and then this week has been a complete turnaround again. And let's have a look at what's happened, and then we will have a better understanding of what actually happened in the market, right? So I'll just put everybody on mute. So in case you want to say anything, please feel free to unmute yourself. So what you should see on your screen, and if you can't see it, please let me know, is a Nifty chart. And sorry, that's not really the. Okay, so if you look at the chart, that is just to illustrate the head and shoulder I'm talking about. This is the one that we've been talking about, and this is weekly chart of the Nifty. And as you can see now, I think it looks much clearer than it did in the couple of weeks back. You have the left shoulder here, you have the head there, you have the right shoulder, you have the breakdown about almost 3-4 weeks back. Then you had a recovery in the last midweek of May, and then this week we've had a test of that neckline and it has come down. And just to very quickly review what we said last time, or in the sense the last 2 weeks, because I'm sure there'll be some folks who are really confused and maybe some who are very upset because the markets have sort of done things very dramatically different from last week's call, right? So if you can sort of bring yourself to ignore this big red candles of this week, what we said last week was we had this fantastic volume on the day after expiry. Here, this is the one actually, right? And this is the green candle that we saw. And when we were talking about that, that's a volume that has not been seen for many months, right? So that too a volume this high after expiry. Till the week before that, so we are now talking about this part. We were talking about a possible bull trap in the market and how the market might be set up for people to buy, but it was actually going to get sold into much later. And then, so we had a very bearish view on the market 2 weeks back, saying that there is a bull trap in place. And then last week, because of that exceptional volume that I was pointing out, we said, well, maybe we are looking at something very different. And all the calls given last week were on the bullish side. Now, one thing, and I'll definitely take responsibility for this, perhaps that was not emphasized enough last week, is the following. So I hope you bear with me, right? So this is where we were last week on Friday close. And what we said is with this sort of a move, with that sort of a volume, this could actually be signifying a move up. And what was not emphasized sufficiently, I think, was that this neckline had to be broken. It was mentioned, but I don't think it was emphasized enough. And that's, I think, really the big takeaway at this point. If you look at the market closely, at the candles closely, in the week before that, and I'll just put a different line for the sake of clarity. Sorry. We had this level that the market had come to and not been able to cross. Okay, I'm just going to mark that in white. Make it bold, right? So that's the level the market has come to. It has come back there, and that is where the neckline was. And the question was whether that neckline would break out or not. And by the looks of all the charts and some of the moves that were happening on individual charts, there was a strong suggestion that the neckline would probably get broken up. Now, the thing I want to emphasize here is that if one is looking or was looking for longs at that time, and or even if one is looking for longs even now, the message to get is until and unless this neckline was effectively broken out, and we did mention 8,500, 8,550 should be crossed and taken for a day on high volumes, then only are you going to get really some good longs. Okay, individual stocks did go up. Most of them, of course, went down. But the point here is that the index was not able to break this neckline on Monday. And then on Tuesday, you had this big fall after the RBI policy. So to note, the point is this one, 7 month head and shoulder on Nifty neckline tested and below, but did not break out. Right, so that is an extremely important point. And those of you on the BAC WhatsApp group would have received a message, I think, on Tuesday saying that now. So the target for this fumbling around with the new keyboard, sorry. For this head and shoulder is 7,700 on the Nifty, and that 7,700 target is now revalidated, right? That's a very, very important thing to note. So the key thing here is the neckline not being tested and the implications of this neckline not being, not being broken out. So the neckline was tested, but it was not broken out. And therefore, now 7,700 as a level is something that we've got to watch out for, right? So could 7,700 come? It could definitely be on the cards, right? So this is something to keep in mind. So the 7 month neckline. Hi Vidya, welcome. Okay. What has happened subsequently so far is that we have some levels to watch out for. One would be the low here, and that would definitely be some way away from breaking. In the last 2 days, we've had a lot of volatility in the market. With today we had a high upper shadow. Yesterday we had a big lower shadow, and that's where the 200-day moving average is. So we are now firmly below the 200-day moving average. Plus the sell-off on, and this is what's surprising. Again, I mean, I'm sure those of you will remember that last week when I said about this green candle, I said this is something very weird, something that I have not seen, something very different, something very unusual. And I guess in retrospect, I shall listen to my gut a little more and refrain from being so aggressive on the long side. So that's come about. And what's very interesting is that we've had the sell-off on Wednesday, actually, after the RBI policy on the 2nd. We've had a further sell-off, and that volume is very, very high. And now we've got the last 2 days where nothing much has happened. This is the low that you look at, 8,000, right? I think that will get broken. As I said, 7,700 is the level to watch out for. So let's just put that there. Right. So this is the head and shoulder target that we all need to keep a look at. And if you go back in the past, well, there's been quite a bit of activity around the 7,700 mark in June, July, August of last year. You've got that tested also in October of last year, right? So absolutely no reason why this could not happen. And then if it goes down, then lower down somewhere, maybe even 7,450 is one more level to sort of just keep a track of. Right. So let me just make that a different color. We have too many colors today. All right. All right. So putting this in the weekly format, you can see that this week has clearly been a very, very bearish week. Strong bearish candle here. If you remember, not last week, but 2 weeks back, had mentioned this fact of how 600-point falls happen in 3 weeks in February, then again in April, and why a 600-point fall could not happen. This time it could very well. It's from 8.4 to 8.2, let's say even 8.5, 8.4, so about 200 points. And next week will really be interesting to see how the follow through happens on this, right? Okay, so I hope this is a lesson learned well by all, all of us who are serious about technical analysis, about how we need to track these levels, head and shoulders, necklines very, very closely, and how they can actually give us extremely good heads up and very precise levels on what may not happen. So again, reiterating the fact that the neckline was not broken out on Monday, and then on Tuesday we just had the sell-off, and then on Wednesday you had the big volume further sell-off. I think just sets the ground for low levels which could happen. So coming back to events that have happened this week, we've had the RBI policy with 25 basis point cut, right? And the market was not happy with all retrospective analysis. So, I mean, as though the RBI really cares about it. What was important on the RBI policy is the mention of risks, right? So monsoon, right? And then there's been a lot of dilly-dallying on that on the monsoon side. Is it normal? Is it not normal? Somebody had met yesterday, part of the ASMA meeting, was talking about how Motilal, because they have a very extensive sub-broker network, is actually calling up and tracking how the monsoons are in Kerala. And Motilal feels that everything is like sort of honky-dory and fine. But again, I think the debate is going on. And then RBI also mentioned the risks of Fed increasing rates and the risk of crude oil price increase, right? There's also a finance minister who has called a meeting of the CEOs of banks, sort of trying to figure out why the banks are not cutting their base lending rate. The lowest is with, I think, SBI, which has cut 30 basis points in spite of a total 75 basis point cut by the RBI. Right? So these are three things. Then, of course, we've had Greece, right, which has postponed its IMF payment. And more and more people are convinced that it's just a matter of time that Greece will get out of the Eurozone. And more people are veering around to the idea that that event of Greece actually getting out of the Eurozone has probably been priced into the stock markets. So if and when that happens, maybe nothing major will happen. But again, these are tricky things, and it's best just to wait till if that happens, and when that happens, to see how the markets behave, right? Then we've got anything else? If I'm missing anything, please update. I think more or less that's it. Our GDP numbers were out. There's nothing fantastic about it. Right. Okay. So just to reiterate, 7,700 on the Nifty is now revalidated, and that means we're basically looking for short positions going forward. All right. Okay. So now let's look at sector indices and see what the sector indices have to say. So there has been a slight rearrangement of this. So starting with the banks, so you should see the bank Nifty on your screen. And well, actually, this is a good IMR for those who are like maybe re-entering the markets or sort of trying to figure out their head around charts, because like I said, I moved to a new system. My old studies are on the old system. I'm going to have to put a whole series of new lines here, which is good because starting the analysis from scratch once in a way is actually a very, very good idea, because you tend to get otherwise so biased with what you've done, and then you can't see your own mistakes. Right? Okay, so I would say that Yeah, that's an important level, right? So you can see tops and bottoms there in that zone. So that's been tested and then broken down. And the Bank Nifty, as we speak, is on this 200-day moving average. And if you observe where it is right now, you'll see that that level is something that was tested December last year. We came back to that bounce, and we are again back down. We have a very good double top on the Bank Nifty, and 17,550 is something which is likely to break down. If it does that, then the next level on Bank Nifty is probably around 16,260. So that would be the level to watch for. So both on the Nifty and Bank Nifty, you're looking basically at short. We can have a pretty good stop loss here at around 17,920 for the Bank Nifty. And if you're really patient, um, and this is not a target, this 16,300 target, 250 target won't come in this month. Maybe it'll take some more time. Maybe we'll have to see what the outcome of the finance minister's meeting is with the bank heads and maybe various things. So I'm not expecting a 2,000 point fall in a day or two, though actually, if you look at it from here, 18,700 to 17,500, 1,200 points did fall happen in 3 4 days, right? So not that it's not possible, just that might be a little slower this time. And then after that, you've got some really, really good support, I would say, around this zone of around 15,000. We'll just put a psychological number. And as of now, that might actually turn out to be a good place to start buying if and when it goes there. But of course, we'll have to wait and watch, right? So I would basically be short on Bank Nifty. They're going to do that through futures or buying puts. Is something that you can have a look at. What is your preference? And just coming back to the Nifty again, uh, stop loss on the short at around 8,250, and the real thing will be the break of 8,000 and then 7,700. That's what 400 points from here. Absolutely no reason. That's actually if you if you keep it in the context, 400 points from here is just 5%. It's not one major thing. The 5% correction that could happen on the Nifty. Right? Okay, and the stop loss for that, like I already mentioned, will be around 8,250. Worst case, I would say 8,200. Yeah, 8,250 is probably a good stop loss. In case there's a bounce, then the big resistance is at around 8,400, 8,500, and it's very, very unlikely that the market is going to cross that as it stands now. Let's put a downtrend line here for our future reference. Okay, so that would be the trend line to watch out for in the future. And till that gets broken out, there's really no much hope for a up move. Okay, then let's look at the indices. I just might get lost here because, like I said, I moved to a new system. So in case I miss any, do remind me. Okay, so let's start with BSC Auto. Okay, fine, I've got them here. Thanks. Good. So BSC Auto, the big thing on the BSC Auto, which I think I mentioned, is a sort of rounding top that was there. It's unfortunately I can't put a curved line here on Metastock. I don't know. Maybe if that function is there, I'm not aware of it. So that is where the life high sort of was at 20,000. We did, of course, go a little bit beyond that. And then we had this level to watch out for, which is at 18,500, which it has definitively broken. And we now are at the 200-day moving average on the BSC Auto. The level to see it breaking down from will be this. Okay, and once that goes, you can see also a cluster of, a sort of topping pattern there. So that is 17,740. Once that goes, then I think we are looking at these levels lower down, okay, at 17,000 on the BSE Auto. Really wish it was a traded index. Unfortunately, it is not. Any hope for revival is only if it can cross this resistance line of 18,600, which at this point I think looks very, very unlikely. And there's nothing on the indicator to show any strength either. Okay, next we are looking at capital goods. So capital goods, this is very interesting. I was expecting something quite negative on capital goods. So the level to watch out for on capital goods really is this. It's really been playing around that level for quite some time. This is from 2010 level. What does the market do with that level is really the question. So it's a 5-year, multi-year resistance support. And what's surprising is that as of now, it is definitely holding while the overall market is really weak. And this is definitely higher than most of the other all the other ones we have seen as far as its move relative to the moving average, 200-day moving average is concerned. So honestly, I'm surprised. This is definitely showing strength, no doubt about that. And even on the indicators, when you look at the MACD or RSI, there's definitely some strength on that. And as and when this level gets broken out, you will probably see faster, bigger move. So wouldn't be recommending, what should I say, all out long on this at this point, but definitely this is showing some sort of strong performance. Uh, so capital goods, so I would say you shouldn't short capital goods. On the other hand, if you're holding capital goods, then there's really no hurry to sell it either. Right? Then looking at FMCG, so we know what's happening with Nestle. Uh, I'm actually quite glad I've got some gloating points and all that at home. Been trying to tell certain folks in my house that we should really be eating far less of that stuff. And well, like they say, "Ghar ki murgi dal barabar." No one listens. And finally, when the newspapers talk about it, then it'll be like, ah, yeah, yeah, yeah. So, so there is a lot of concern, as you've been reading in the newspapers, about the food standards. And FMCG is, of course, not only food, but that is something that we've got to keep in mind as to how this might pan out. There's a sort of big revamp. I don't think there will be a revamp as such, but a strong relook at food safety in India and how what that might mean for companies, their profits in the next 1 or 2 quarters. So things, of course, will go back. These things keep happening, and some stocks actually might actually be at some very good buying opportunities. It's a mainstream industry. Uh, the government can't really say no after some time. Nestle, of course, there are now questions being asked across the world, and as you saw, Heinz and I think something else was also um, sent some notices. Um, okay, so FMCG big fall from 7,900 to 7,400. Seems to be taking a break right now. One could call this a morning star, but you know what? Until and unless this resistance breaks, which is at 7,650, I wouldn't really be buying into it. As a matter of fact, if it goes up, I'd look at shorting it. And on its way down, we've got this level to look forward to, which is at 7,250. And then after that, we shall review. So clearly bearish, 7,250 first target. As it goes higher till 7,650, would actually use any bounce to short. And then once 7,250 breaks, then we can review and see where further down this could go, right? So next could be, well, 7,000. There you have it. Let me just take that off right now. Okay. So one of the things I hope you can see, I put it on weekly chart, is that you really have a clear top formation and you've got some really big red candles on the way down. The green candles on the way up are clearly getting weaker. And I think you're going to see this on a lot of um, stocks, a lot of sectors. You can even see the moving averages have turned over. So this is why I'm pointing this out, is that this is seeming like a really important turning point, as in maybe uh, I will definitely not go as far as to say that we have a primary top here, but we have a substantial top which is unlikely to be reconquered rather, surpassed very quickly. Well, anyhow, could be wrong. So, but just wanted to point out how things have changed in the last several months. Okay, so FMCG also bearish. Then we have healthcare and so healthcare was chugging along nicely, and actually, relatively speaking, it's actually still quite healthy. You've got this definitely above the 200-day moving average by a meaningful amount, and it's like sort of a tweezers bottom there at a sort of support zone, and it's just to sort of, I think, wait and watch here. If the overall market falls, then there is of course the tendency in the market to look at pharma and FMCG as defensive stocks. And in case money moves there just because of that, not because of actual merit there, but because of a defensive uh, move on the portfolios, then you could see some relative strength on this and a certain bounce back. But I would still say overall, again, if you go to the weekly chart, you will see clearly the bearish nature of the moves that we have been having. So healthcare, I would say, is headed to at least a 200-day moving average, which, well, 15,100, very nice. 15,000 rounded off number. So we're looking at about 1,000 points. I don't have my handy calculator. About 5%. Are we talking about that? Yeah, 6% correction on the healthcare space. Then let's look at IT. So, the rupee has been depreciating, and there's been pressure on that. And if the Fed does something to increase the rates, there'll be a lot more pressure on the rupee as money will move out of India. FIs won't pull it out. So we have a interesting situation where fundamentally, with a weaker rupee, it's good for these companies, but I can't say that's really showing up in the chart. Of course, you can't say how much of what is showing in the charts, but what the charts are definitely telling you is this: here on the bottom line, you have the 200-day moving average, and on the top, you have the 2200 and the 50-day moving average on top. So this is clearly range bound, and you would be best advised to, I think, uh, stay away from this and wait for um, a decision by the market as to what it does finally. Um, Sort of symmetrical triangle you have that, and once that decision is made on that, then we'll have a much better idea about what to do. But over the last 3 months, clearly this is looking bearish. Okay, so that would be a sort of 3 month trend line, even on the most extreme basis. So, well, we kept repeating. Always assume that you are on the side of the larger trend, and that simply means that we have to assume that the trend is down and the symmetrical triangle could break down. So IT could fall to 10,400. ESC metal. Okay. So metal index, uh, look at how far the sector is from its 2008 peak. It's below the halfway mark. So how badly the sector has been beaten down. Very interesting factoid or fact. Today's paper had this thing saying that JSW Steel has become the largest volume manufacturer of steel in India. It's by manufacturing capacity, it is larger than SAIL and Tata Steel. Uh, I found that very interesting. However, in terms of profits, its JSW is less than both. So clearly not a very efficient organization, but well, very large organization. And who knows, maybe it's not maybe, it's a very good candidate for restructuring, for extracting efficiencies. And if that happens, then I don't know where JSWC stock is, but as and when that happens, then you can see maybe a big move up on that. Right? Just throwing some thoughts out. So we've had this multi-month downtrend line on metals, and it's a multi-year sort of downtrend. Whatever bounce has been effectively been sold into, and we have a tweezers bottom here, and that's the level two. I would say watch out for, and if and only if that breaks, then you could expect a big down move. Last week I had recommended quite strongly about Dalco and some other metal stocks, uh, saying that really out of character for me, but they were at multi-year lows, and they could actually make you a good profit if they bounce. So we'll have a look later as to how that did. Right? Probably miserable, given that you see the metal index is just broken and then fallen from 9,800 to 9,200. That's almost a 6-7% cut on the metal stocks. But could be a potential double bottom. We'll have to wait and watch. Uh, hmm. What's very interesting on the on the metal index is that your MACD, all your indicators actually, not just MACD, MACD, RSI, have actually showing strength. And I will even definitely go to the extent of saying, no, there's no divergence. I was looking for that. But there is some strength happening, multi-month strength on the metal side. So this could be a buying opportunity for some gutsy folks. Let me just put that up. We see metals, line, maybe, right. So that is something. Of course, all the other indices are all bearish, but I think I mentioned this the same thing now in the session last week. Okay. So, but of course, it did come down, but Now that double bottom is a potential possibility to be good to watch. If metals go up, by the way, there's plenty of resistance on the way up. You have all the long-term moving averages, you have the downtrends, you have some very important resistance lines which are not going to get broken out very easily. So anybody buying into them will have to really have a lot of patience and grits to um, see through this. It's a premature buy because the trend is still down, but it could be if the support holds here a very good entry point in terms of risk reward ratios. Okay, what do we have next? So something wrong with that. DSC power. So power also, of course, this index this is only from 2011, so no way of knowing how this was compared to its 2008 if it was done there. It wasn't, so that's why the data doesn't go back. It would be good of MFBSE to actually back calculate and give us that data. But of course, they haven't done that, and if they have, well, maybe then it's not definitely public, and they are selling it at a nice hefty price. Anyhow, so we're looking at the power index, and well, it's also very much down, as you can see. No hope on it, and a good would definitely be something you have to consider on your short side. Big, a decent recovery on Wednesday itself, and then Thursday, Friday, it sort of held on, but you've got a fill green, and this is at a multi-month support level of 1050. So I'd rather just wait and watch, almost like the BSC metal with a double bottom there, and it'll be important to watch. Okay, so some are like at that neutral zone where they could take support, but well, just keep in mind that if the overall market is expected to uh, correct as much as we are saying, 7,700, then you shouldn't really be looking at, shouldn't be any hurry to look at buying anything, right? Unless there's some reason for a particularly strong stock, um, which is, you know, just not affected by the overall market sentiment. Uh, okay, so I'll just leave that. Then we have VLP. Hmm. So nothing seems to be helping this very beleaguered sector. If the monsoons really are not that good, then I'm sure it's going to take a hit further. Um, there will be a lot of very weak demand, especially in tier 2 cities where some of these companies are now becoming quite aggressive. And well, nothing is helping uh, uh, on the fiscal side. Interest rates have not come down by the banks. RBI reducing interest rates, but the banking system not passing it on to the rest of the country, the economy. Well, that's just not going to work. So housing loans haven't really gotten that cheaper. And well, whatever it is, this has broken at 1500 important multi-month support. Um, no strength at all, I would say, anywhere on the indicators. Good recovery on Tuesday, but clearly still bearish by any measure. Weekly is actually looking quite bad uh, after been a while since it's given such negative moves. And maybe it could go to 1200 again. Don't expect that to happen in a day or two, but it would definitely be on the cards. This is really bad moves and bad pain for this entire industry. And where was it? 14,000. and now it is 1,400, 90% gone. So if you don't protect your investment, this should be a lesson you will never forget for the rest of your life as to how bad things can get if one does not actually manage your investments. Right. Okay. Mm, so that is reality. And then what else do we have? Mm, okay, we see small cap. So small cap index was really doing a lot of uh, topping pattern, as you can see, from easily October of last year, and that's what so though it's very far from its life high of 2008 of around 14,000, the lesson to be learned is that some of these things can take a lot of time to actually drop. You've got this 11,500 as a psychological mark. I'll just put that, and right. So you can see that it stayed there for a good what 1, 2, 3, 4, 5, 6, 7 months, and then sort of range bound and still in that range actually. I'm just going to put that at 10,500, and we'll have to just wait and watch with absolutely no reason to believe that this is going to hold out. And well, 1,000 point fall. Of course, we don't have this as a traded index, unfortunately. But if you're looking at any small cap stocks, then well, really no hope for these either. Just wanted to get a sense of how excruciatingly slow this sort of moves can be. Clearly, distribution going on here. Right? Okay, mid cap. So nothing's been spared. You've got the mid cap index, and that's also clearly going down. I would say relatively it is stronger than the Nifty. The Nifty is below the 200-day moving average. This one is not. That's the reason I'm saying that. So in terms of relative performance, the mid cap space is still doing better than the small cap space. But we want these sort of very small body dojis or spinning tops are usually not a good sign. And any move to maybe 10,500 and the markets will probably push it down. The only thing to watch out for is the 200-day moving average at around 10,000. And once that gets broken out, then it's all bets off. You could see much further down moves. Okay. Yeah. Let me see if I missed anything. I don't think so. All right. So we just say there's nothing in CNX to look at. If there is a CNX IT and infra, because we don't have infra as such in the BSE side. The problem is these are relatively recent indices, and we don't have enough back data for them. But anyhow, so infra showing strength like capital goods did. So you've got to this is a good a good way to look at things within the sector. So we remember very clearly, I'm sure, that capital goods are showing some strength, and I would say so is this. Okay, so is this showing some strength and haven't fallen as much as some of the other indices have. Um, and yep, even on I would say the indicators of some strength which is there. So you just have to keep a track of that. Having said that, we are in a sideways move since June of last year, so 1 year of sideways market on the infrastructure side. The question is, what side does it break out? Remember one thing: if you know infrastructure capital goods could going forward benefit from one big thing, and that would be any big projects that the government of India puts up to on the infrastructure side. I don't know what is her name. Is that Sadhvi, who is the minister? She said that 2017 or something that the Ganges would be pollution free, and the government of India decided to take the entire responsibility of cleaning it up, the financial responsibility. I don't know how they're going to manage that in 2 years or 3 years. It's probably a multi-decade task. Whatever little understanding I have that, but let's say they go hammer and tongs with such projects, then there's a huge fillip to these infrastructure capital good type companies, and you must just watch for that move if it is happening. So this is another place that I would not sell. So what I forgot to sort of wanted to mention and I forgot. Um, so when I say relative strength, I mean relative strength versus the Nifty. So capital goods, infra, and maybe metals. All other indices are bearish. Okay. So on that, we have to look at IT. The reason I'm looking at IT, even though we looked at it in the BSE side, is the CNX IT index is a tradable index, as you know. Right? So Nifty, Bank Nifty, and the CNX IT. Of course, liquidity is hopeless, and hardly anybody does anything there. But I don't know. We'll just mention it, and those who want can read it further on the NSE website. So the CNX IT index has been revamped by the NSE. Sorry, and the hope is, of course, from the exchange point of view, that there be a bigger adoption of that index for trading, hedging. I think it is on the NSE homepage itself. So go have a look at the changes they have made. Whether you will see that in terms of higher liquidity and trading activity in the IT index, that remains to be seen. Right, so the new revamped IT index is already up and running. So just like in the BSE index, the CNX IT also stuck between, I think, BSE first. I'll just go review. The 150-day moving average on top, the 200-day moving average on the bottom. But by all looks of it, going to break down. And if it goes to 11,000, then that's really the place to watch and see how that goes. Right. Okay. Right. So would be bearish on IT also till 10,900 and then to 10,700. Okay. Okay. So that's it about the sector indices. Is there any questions or any thoughts? Please share them. Right. Or in case you feel something has been missed out, then we should discuss that as far as the individual sectors are concerned. It's just since Vidya is here, I have to mention this. So he's been actively tracking open interest data for the Nifty, and all this has also started just this week and last to start looking at how individual constituents, the four constituents being the FIIs, the DIIs, the proprietary traders, and the individual clients, retail and HNI. There, so the NSE gets this information. It knows it knows, of course, everybody and who is who. So it's able to categorize all open interest positions under one of these four participants. And Vidya has been creating some really great stuff on visualizing that. I don't have it here, so I'll share it some next time because it's not really. We've got to figure it out as to a better interpretation of it. But what I just wanted to say is that to look forward to that and remind me when we have a next webinar. We may have a dedicated webinar for that just to get people up to speed on that. But just the reason I'm mentioning that is in that after the last Thursday expiry, this study showed us that the 7,700 level on the strike put for the Nifty significantly changed, and that's where the biggest support actually now is. Please correct me if I'm wrong with you. And that was a welcome news because well, after that head and shoulder neckline not breaking and this downside target getting revalidated, like wow, okay, fine, we've got another piece of news that bears out the 7,700 mark. Okay, all right. So that's it. So let's look at individual stocks within the Nifty, and we will start in a sector-wise manner. And we start with Bajaj Auto. We'll start with autos. So in autos first is Bajaj. Let's see. All right. So Bajaj Auto had a great run up since okay, and then we had this very nice bullish divergence, which let me just put it here. We had this downtrend, of course. And then you had the return line, which was that. Okay, let me not make it that big. At least till there. And we can see better on weekly. Now you can't. We had a very significant bullish divergence there. That was on the RSI. Alright, so I hope you can visualize this. Too many lines for those who are unfamiliar, and the MACD also showed a very nice basing pattern. So then we had a move from 2000 levels to 2350, and then it's come down, and we have a clear top there at 2350 or thereabouts. So that's the level to watch out for. And then it's come down with the rest of the market this week on, I would say, falling volumes looks like, right? So something definitely cooking, I would say, in Bajaj Auto. The life high was there. Okay, and it's come to a very important point, which is the 200-day, 150-day moving averages all clustered in one zone. The question is whether this breaks down or not. It's going to be tough to give that call. So it's best to wait and watch and stay away from the stock. Of course, if you look at this uptrend line that has clearly been broken, that's the not even a need for that line there. So I'm just going to remove it from the chart. All right. So best to wait and watch. So there's no opinion on Bajaj Auto could actually be a good place to buy. You can see significantly lower volumes. There would not be in any hurry to buy. Having said that, if it goes below 2177, quickly short it with a stop loss of 2230 or thereabouts, and at least 2100, 2075 would be the target on Bajaj Auto. Next, Euro Motors. So that's definitely showing some strength in my opinion, right? So did a sort of exact copy of what the Judge Auto did in terms of a nice move. Remember, this was one, the lesson to learn here was the divergence that did not actually work out. So, good example of things that don't work. And then the next bottom was really the place for buying it. I'll just come to that in a while. Here we are. This was the divergence that didn't work actually, the bullish divergence here in Jan, Feb, March of this year. When it fell to 2,300, and from there has done a really good job of going to 2,800, almost 2,750, and then it uh, came off. We are at 2,500, and actually could be a place to buy. Again, the volumes, as you can see, are really coming down. So again, would not be in any hurry to go long or short on this. Let the market decide, and then you can take a call. Uh, there is that very famous uh, um, just thinking of the exact word. Sorry, candlestick charting on the consolidation pattern list. We have the quotation. There's a time to play, there's a time to work or something, and there's a time to rest. So sometimes you're going to have situations like this which are very iffy, and that's the time to rest. Do nothing, find some other activity to distract you. Don't be in the market. So Bajaj, Hero, we stay away from that. Coming to M&M. So M&M, well, again, made a new life high, has come down, and going sideways. So not much happening in M&M because we've been doing a lot of joint ventures. Spoke about one with a specialist agricultural machine manufacturer in Japan. A very win-win situation. And as a matter of fact, when I got to know about it, like I was mentioning, watching NHK World, it was top news, the top business news there. I didn't really uh, observe that in the Indian media too much. But anyhow, coming to this between 11,065 and 1270, it's been range bound. The volumes also really not, well, they're also diminishing. You can see this clearly. March, April, May. We do weekly also. Uh, I would, again, so weekly, I think it's beginning to show strength. This is really a surprise. On the one hand, we are saying Nifty very bearish, and on the other hand, we're coming up with all these stocks so far, which are actually showing potential buying opportunities rather than selling opportunities. But we want all these buying opportunities will require grit and patience, not really. I think will require tons of that and living through volatility. Okay. So low of 1165, wait and watch would actually be a good time to sell out of the money options rather than look at buying um, uh, anything for the spot at this point. Right? Okay. Next, Maruti. So we said about Maruti, uh, no, that maybe 4,000 is on the cards. It showed a lot of resilience in not going down to the rest of the market, and actually, as a matter of fact, you can see that it's made a fresh life high this week, right? I think the Celerio diesel has been announced, though the company itself says that it's not going to be a big addition to the bottom line, not much. But one news that I found very significant was that Maruti is going to introduce 15 new vehicles, I think, in the next 2 or 3 years. And it actually has. So one of the directors who spoke about this at a talk mm, said that we've got only 15 vehicles now, all put together in the last, I don't know, 25 years of this company. and now we're going to introduce 15 in the next 2 3 years. So we're just going into a very very different league. So we'll have to, I guess, just wait and watch and see how that works out. As of now, definitely showing strength. The volume, however, is just a bit of a concern. It's really not there, except this end of April volume where it really shot up nicely, cooled off, and the bias is definitely bullish. We're just wondering, how it behaves at 4,000 and to what. This could actually even be a sort of flag at 3,700. One could consider buying it with a very nice stop loss for a trader around 3,650. And once 3,900 breaks and 4,000 is very definitely coming on Maruti. Okay, next we've got Tata Motors. Oh, what happened to that? Very clearly been beaten. Mm, So, and selling on high volumes. That's interesting. So, this is perhaps set to go down even lower by the looks of it. Can't see any support really anywhere. Um, okay, and it is at some sort of a support at 435. Remember that sometimes if you look, you'll always find something that you're already biased towards, so you've got to be careful. But yeah, sure, this was definitely a support zone, not a particular level. So around here it could, but the volumes are just something else. It's just strongly suggesting that this is going to go down, and I will put a stop loss sell order below 430, 432, with a stop loss above 450, 455. And where could it go down next to? I would say at the very least, well, 400, I guess, plus minus say 5 rupees from there, 5 10 rupees, but clearly looking like it's going to go down. As a matter of fact, even go to the extreme of saying that any bounce on this should also be used for shorting, right? It's going down on high volumes. It for whatever reason, if the market does do a bounce, then maybe even up to 460, 465, and even 480 would be good resistance, and that should be used for a bounce. If that bounce is on low volumes, then commit even stronger shots to the market. Right? Okay, so that is Tata Motors. So we've got one clear shot in autos. Tata Motors, clear shot. All other autos, potential buys. I'm emphasizing the word potential. Please don't ignore that. Okay, next. So that's autos in the Nifty. We next look at cement and cement products, and we start with ACC. So ACC going down, and well, one thing about cement companies that you've got to keep in mind about is the monsoon starting. Good, bad, that's different. Actually, it cuts both ways. If it's a good monsoon, construction activity will come down quite a bit, and cement consumption drops. And though I have not done any study on it, and if somebody does, it would be great to expect cement company stocks to do badly or underperform this quarter. But at lower prices, they could definitely be good cyclical in terms of annual cycles to buy. So look at 1400 at least on ACC, in my opinion. Okay, gone down today on higher volumes. So that sets the stage for potentially lower prices, but we could review that only after 1370. So 1400 first, it's what at 1458, 1434 should easily go to 1400. Those of you a little aggressive might want to look at buying the 1400 put and see how that works out for you. Go to 1370. If it goes there, that will really be a good profit on the put. Clearly, you've got a downtrend. There's nothing to two ways about it. And yeah. Okay. Then we look at Ambuja Cement. Should have more or less the same picture. Yes, it does. So again, really nothing See here, they're moving as a pack very clearly, and especially Ambuja and ACC because they are both managed by Holcim Cement. So that is something to keep a track of, and that is the downtrend line to watch out for. Okay. So today we broke all the lows of the recent few months on high volumes, and as a matter of fact, I would say Ambuja is the better shot than ACC. Very clear, I think, support resistance at 215, 205, that zone. But I think it's going to come to 205. That's my opinion. Then we've got Grasim. So, see, broke a important support line, multiple months, almost 1 year actually. Okay, and it did that on high average volumes are a little higher. Wouldn't say too much, but this is what happens. 3-4 days of big moves, then maybe 2-3 days of sideways, sort of harami type patterns, plus doubts or thoughts that it will probably hold. But what's the best trade here is a move to say 35.20, 3500 also. It is at 34.08, and that would be probably a good place to short. And if you do that, a stop loss there from 35.68. Definitely not expecting it to go above 3600 at this point. Very strong resistance in that zone. The other way to track this is there's going to be, I expect, a good amount of selling when this level breaks. And there's going to be at least a certain set of traders who are going to very carefully watch this level. And that is at 33.96. And it will be interesting to see what the informed guys do. Either they're going to aggressively short here or they could be buying here. My bets would be that they're going to short here. So any move, any bounce should be used for shorting to up to the levels already mentioned, and or a breakdown of this level should be used to short. If that happens, you're looking at least 33.50. I think you're definitely looking at somewhere around 32, 32.50, 32.25. Right, so I'm just going to leave that there. So in that 3200, 3250 zone, I think you're going to get some support. Expecting at least that much. On Grasim, then we have Ultratech, and that's actually been showing strength amongst all of these four cement stocks. But well, today even that went down. Sorry, on slightly higher volumes. Watch out for 2750 and how that behaves, and then for 2550. And if that goes, then it's definitely a good place to buy at around 2400. Right. Okay. We'll have it there. Yep. Watch out for that. Okay, Ultratech. So all shots, no longs at all on cement. Okay. Cement. All shots, in my opinion, I think Ambuja is the best shot. But again, that's only my opinion. So relatively speaking, if you have to choose between several. Okay, let's now look at construction, capital goods sort of combination. We've got LMP first, and well, definitely showing strength, and it's a big component of the capital goods space. Almost recovered all its losses of 2 days, actually, that's all. And up, however, on lower volume. That's the danger. And what does it do after that is really the question. We'll just have to wait and watch. But very clearly, I would be biased on the long side and sell only if it goes below 1550. 1600 is a good psychological and also 200-day moving average support. Right? So you want to keep that in mind. Only concern is the volumes. But otherwise, on the indicators, it's all looking strong, right? So that is LNT. In this list, we should also finish off. I keep missing it every month or every time. Where is that? BHEL. Yeah. So BHEL. Oh, look at this. Really, really good volume buying on last week. And that's a sign of definitely some big guys buying. It's definitely not retail. And well, we should not be doing anything else except buying BHEL. So that's probably the life high. I need to change my data loading conditions. It's not loading the entire history. Okay, and that's a sort of rounding base that it has done around 225, 230. Yep, low volumes, high volume breakout, break of this all these multiple moving averages, test. I would say consider buying this on Monday, Tuesday. But you know what? Here's the risk. If the Nifty does go to 7,700, then this could easily be at 230 rupees. It's at 246. So any longs have this risk attached, which is that if the Nifty goes down, it's just a matter of time that they could also just fall down. But this is not something to short. I would put BHEL and LNT on a stock watch list to buy as and when some event in those stocks gets triggered and or there's something where the Nifty recovers. Right? Okay. So that is BHEL. Now let's do uh, FMCG part. Okay. So LT and BHEL do not short. Look to buy once the market bottoms out. Okay. So now let's looking at the FMCG sector. Let's look at Hindustan Unilever. So HUL, all right. I think I'm going to find lots of stocks sort of very critically poised at certain levels, and HUL is at the 200-day moving average. And the question is, what does it do now, right? So will it break down? Most likely it will. I think this uh, food controversy, of course, HUL, no, by the way, HUL makes ice creams and what else does it make? FMCG stuff that we eat, right? I'm forgetting. But there's going to be a lot more, what do you say, scrutiny of this, and this could hurt the company's results wise. We already talk about how the EBITDA margins for Nestle could be affected, and well, it could rub off on other companies also. And we'll have to see as to what happens there. Maybe I think it will most probably it will break down, in my opinion. So you could be short on this with a pretty good stop loss at around 840, 845. Best would be to sort of put a stop loss SLTP sell order on the Q at around 810 with a stop loss then at around 835 with a target of 770. That's my view on HUL. Then ITC. So again, you can see how from 2009, and this was 80 rupee stock, it has gone to 350 rupees. So that's gone up 6 times. No, sorry, 5 times, right? And after that, for the whole of 2014, 2015, this has really, really not done anything. We've got 400 rupees as a very strong resistance now with a cluster of double tops there, but I think it is. And after that, you've got breakdown after breakdown of really important levels. You've got 350 here, which it has broken down, and then you've got a breakdown of this support level at around 315 or thereabouts. Okay, and then breakdown of that too with a gap down. That's something to keep a note of. So that is my toolbar. Right, so that's a gap I like to map for future reference. It's definitely going to get closed one day. Where you had a green candle, but wouldn't read too much into this. The trend is very clearly now down. A little tough to put a. Alright, so let's put that. Okay. So 290, well, more or less there. I'd say 290, 285, somewhere there is good support. We just have to wait for that. Probably better looking at HUL because this one has, I'm not saying it can't correct more, it could. Let's look at that today's weekly candle. Hmm, definitely good one, absolutely no strength. Uh, the problem is sometimes, the move has happened already, and when you're sort of looking at towards the end of the move, this is what it could be like for ITC. As a matter of fact, there's some talk that Nestle's loss could be ITC's gain because it's got some noodle, I don't know what it is, the brand is, and ITC has a chance to um, take market share away from Nestle now. But again, the whole product category is going to be under close scrutiny. Okay, so no view on this. As a matter of fact, a bounce would be a nice place to short it. At this point, you're in the middle of no man's land. So we'll skip that. Then let's look at well, it's an odd thing, not FMCG at all. The Asian paints, and this is a consumer category. Mm, so let's come here. And some watch for how it behaves around the 750 mark. Not really convinced as to which way it could go. Um, weekly chart showing definitely weakness and the range bound activity since the whole of this year looks like more like a definitely a downtrend, a breakdown. And I think a double top around 860. But the level to watch will be 835, 850. If that breaks, then I think one should be looking at around 665 as the level to watch out for. That would really be the um, level in my opinion. Okay. All right. So this is a trade below, or just observing a couple of things. You again, this is one more of the stocks stuck between the 200-day moving average and shorter term moving average, but there's a whole cluster of resistances on top around 790. There's huge resistance, but again, there's good support at the bottom. So how do you want to do this? This is again one of those no man land trades. You may want to do it through options for those of you who know, but otherwise, I guess you could just stay away from this. Okay, So we have done on FMCG, consumer goods, and okay, let's take a different tangent and let's look at telecom idea. It was making life highs, and well, continues to do that almost. Today did a big move, and one on, I would say, definitely relatively higher volumes. MACD showing a good picture, nice base formation at around 165. Yeah, definitely watch out for idea in the coming week on the long side. That is like a tweezer stop that it is, if it crosses, then which most probably it would, right? That's I think you could see quickly, very maybe just 2 3 trading sessions jump to 195 zone, and that's a very healthy return, 15 rupees, um, almost 8%. That could happen in say a week or two. And if it continues to show strength, then 200, 205 is taken out, then 215, 220, 225, makes steps of 5 rupees basically, is distinctly possible. And you have a very good stop loss, I would say, below 170 to 171. And if you can do that, that might be a trade worth looking at. However, there is this thing about how the overall market might do. But yep, it's definitely not a stock to be shorting. Definitely a stock to be looking going long on. So that is idea for us. Then let's look at Bharti. It fell and that had zoomed past 400 some time back. And so 400 was a level, and sort of for 4 or 5 weeks just danced around that for uh, almost a month, and then just shot off on that one day from 400 to 435, and then of course it has cooled off. Right? Mm, let's see that for now. What's important about both Bharti and Airtel is that they're both showing strength, and they've taken out, of course, not Bharti, what am I saying? Idea. His idea is making new life highs, while Airtel is breaking some very important multi-year resistances, and much clearer in this. You've got a uptrend of sorts, a multi-year uptrend on Airtel, which is there. One should not be shorting this, and at low positions should actually be thinking of getting out. And you can see that this level 20, if 2009 onwards, and Airtel could definitely be looking to regain its life highs, which is at around on a closing basis, it's maybe 550, right? And from here, of the price being 415 to 550 is almost a 20-25% move. And even if that happens in a year, that would be great. The only concern that I have, so let's put idea and Airtel good buys. However, what will Reliance Jio launch mean for them? If Reliance Jio comes out with the sort of rumors that are there, 4G internet speeds at 2G prices, I'm definitely on the list of folks who's going to move over to Reliance Jio, and I'm sure there'll be a lot of people who might. And unless these guys are Idea, Airtel, Reliance Communications, etc., got some thing up their sleeves where they're going to come out with some mouth-watering offers. I really don't know how they're going to compete with those sort of pricings or technology. It will really be interesting to see. Of course, if 4G comes in, there'll be another spin-off, which is a lot of people will be buying 4G handsets. I would probably be one amongst them. Of course, there are no, I can't think of any. Micromax had an IPO plan, but nothing happened, and there's no telecom mobile company which is listed, so nothing to can be done. And that would have been something to look at. So, well, some of us will have to look at your handsets, be prepared in the next few weeks. What I'm again didn't stress enough about was this surprise that I think Reliance is going to really provide some fantastic uh, competition to Reliance Geo, and I'm wondering why these stocks are so bullish, even on volumes. I think, yep, you can see that. The volumes have picked up March, April, May. I would not be wanting to short this at all. If anything, I would be wanting to go along on that. Okay, so what is Airtel idea? Also, that's been done. Now let's look at IT. So starting with HCL Tech. Where did this line come from? Interesting. Okay, so double top, one rounding top, one single. I can't call it a shooting star, but 1,000 is definitely a bugbear for this stock. Market not really willing to give it that 1,000 rupee or a four-digit uh, title. However, again, you can see went up on lower volumes all here, and then it's coming down slightly on higher volume. I'm just saying that the moving average are a little on the higher side. That's it. So yeah, 870 is really a target to, I think, look forward to. And then after that, in steps of 510 rupees, you've got another support here, which is at around 810. So we'll have to wait and watch on that. Okay. Uh, yeah. Next, Nifty. So we had a lot of talk about Sika earlier and what he was doing with Infi. We all know some recent changes about dress code and some other things. I'm not sure what it was all about. Uh, oh, Vidya left. So Vidya works in Infi. So that's the life high there. It's come down with the whole market, and we had a gap in this. No, okay. But now showing some strength. I think big move here. I think some result or some announcement. So I just prefer to wait and watch on this rather than do anything very aggressive at this point. You've got again this thing situation here where 200-day moving average and the 50 and 100-day moving average all stuck. So just do wait and watch. You've got that level there, and you've got that there. So it looks like an ascending triangle, doesn't it? And if it breaks out, then you buy. If it breaks down, then you short. That's it, right? So wait and buy it only above 2084. It is at 2011. If it's a breakdown, then anything below 2000, short it, right? Targets are 1950 and then 1922. So 2000 is an important level that you want to. Yeah. Okay. Then text Mahindra. Huh. Yeah, so this is where the gap was. So just marking that gap. Let's move it. So big gap down, bad results, or results not as expected by the markets. And then breakdown after breakdown, we've got this move here. And the question is this a downtrend flag? It could very well be, right? Which means that on a very conservative basis, 630 to 550, you're talking about 80 bucks, and 80 bucks further down from where it is, from about 550. 80 means 480. Yeah, 470, 480 mark could be where its downside target is. 500 really not a great support, but around here 450 is a whole cluster of uh, supports that you 450 to in that zone between 430 and 460 is where it could definitely come down, and the measuring implication for the downtrend flag is well inside of that region. So this could really be a very nice trade. You will need to, of course, track that very carefully and see how that goes. Could think about buying a 500 put if you wanted on the Tech Mahindra and all that, but as of now, for the last 2 weeks, it has really sort of taken support here, and you may actually prefer to perhaps just watch this level and see how that pans out. So where is that? That's a little lower than this low, but 537 is what I would watch out for, and a breakdown of that is where I would short. If it goes to 580 also, that's another place to short it. But if it were to cross 580, then the question of the window being closed comes up, and you have a nice long till 620, at which point here you've got again resistances. But I think the chance of it going up right now are slim given the overall market. So at least 500 would be the first target. Those of you who are a little aggressive and preemptive would take a short trade here with a stop loss above this level. So above 565 is where you want to look at, and this is approximately where it is, and you want to look at how it behaves here. All right. So both. So again, reiterating, even if it goes to 580, you might want to short it. Breakdown from here, you might want to short it. Actually, on Monday, Tuesday, if the market is really weak, this is again, if you notice, within the flag at the resistance zone. So those of you who are very swift traders could short it here with a stop loss of 568, and first target would be 540. All right. So that is Tech Mahindra. Then we look at TCS. So TCS, again, volumes are the problem. Really tough to say which way they're going. TCS is definitely showing some strength. You can see that it's been a sort of sideways move from 2400 to 2800 since October last year. All these are now irrelevant. It's easier to see in the weekly chart. You can see that it's definitely been range bound, and the question is, what will it do? Always difficult to say. Over a multi-year period, you can see that the volumes haven't changed much. There's really nothing to take in the volume. This could both be distribution or it could be accumulation. So the real move or the move to trade would be one that is a breakout above 2770 or a breakdown below 2400. Till then, it's really a question of wait and watch. But if you're a short-term person, then a short till 2500, 2520 is definitely good with a stop loss of 2650. Okay. Then we look at Wipro. So Wipro, except Tech Mahindra had a gap, this one didn't have a gap. A big fall from 620 to 530. All right, and definitely not its life high, but in a sense, uh, it is. Okay, and again, range bound, just like all the other IT stocks. There you have a top, except in this case, you have Wipro has all the long-term moving averages sitting above that, and on the recent, at least in the last 1 month, and that's the level you want to watch out for, which is around 540. And the question is, what will it do? 575, 580 could be really good resistances for it, and it could be used for shorting. But again, it's in an overall sideways move for the last 1.5 years. Right, so really tough to give it a call. You have this big rounding top, almost like a top, almost like a big face there. Neckline could have been there by 50, broke down, and now dancing around that neckline. Only problem with that whole study is that you didn't have a big up move that you can call this a rounding top off. So this is not really something which is valid. Okay, okay. So that is Wipro. I would say as it goes high, I could consider shorting it. Stop loss about 585. And once it takes 540, then could easily go down to 500. But well, those of us in the Bollinger Band business, you can see the Bollinger Band squeeze is going sideways. And here, the best thing to do is wait for a move either this way or that, and then take a call on what you want to do. Okay. All right. So most of the IT sub companies are read and watch, except in Tech Mahindra, where that window gap is very suggestive of further down moves, big volume also. Uh, so, but wait for those levels and see which way it goes this way or that. Done. Then we've got energy. So let's look at BPCL. So BPCL definitely showing a lot of strength. New life highs. This is one place I think one should be buying. BPCL, probably HPCL also. We'll have a look at that too. So long-term trend line. Okay, and once it breaks above 860, then definitely 900 and much higher levels are possible, right? Okay, so that is BPCL. Short-term stop loss would be below 830, 825, but at this point, unless some event news comes, or I doubt it's coming back, it's probably looking to go towards 895, 900. So in the same move, let's look at Hindi Petro. So in Petro, a new life high seems to be consolidating now. Lots of drama. Okay. So yeah, definitely looking like a consolidation to me, consolidation move. So big move happened the previous week. This week, so far, not much. Of course, sort of spinning top, but we didn't worry about it too much. And well, tremendous strength on the weekly chart, with very good volume. I would say there's been some sustained accumulation that's been going on this stock. And for those of us who are really, really patient, well, this could offer some very handsome returns. It has to cross 700, probably go there, maybe correct, wait for some time, and then again move back up. Stop loss would be below 660, but then if you're already having a position, you want to make sure you don't lose all your profits. If you're having a, whatever handsome profit means to you, then make sure you've got a stop loss where you don't lose more than half your profit at least. Right. So, yep. Okay. Then gain. So, well, as this been going down and down and down, we did mention that last week that I think now the target is really somewhere else. Right? So that's 200 is just a psychological mark. If there was any um, support in the past, that's probably somewhere here where it already has come. And then somewhere down there is around 150. And really a bit of a mystery as to why it is falling so much. And the reason I'm saying that is um, crude oil prices have actually been firming up. And this gets paid in international dollars at the international rate is, from what I know. I'm not seeing any impact of that, in my opinion, on this stock, and just becoming weaker and weaker. Could be some Vedanta issue, as you know, it's part of the Sterlite Vedanta group, and if there's something cooking there, that's the reason that this is like really being sold off. Mm, so that is there it is. Well, that's a lot of it, as you can see. There's no reprise in it at all. There's nothing. I was going to say nothing. I just stop myself. Interesting. Uh, this is a weekly chart, remember, and there is some divergence which is there on the RSI 24, and this is 26, and also on the MACD, which is showing some strength. I think it's probably better to wait this out. Also, it's now coming down on low volumes, as you can see, and it could perhaps go much lower unless anybody has some additional input. No, I mean, sorry, it could sort of stabilize there. 187 is where it is, but I think tens and all. It's where today, yesterday, low volumes, MACD crossovers, RSI is more towards the 40 mark, not showing the traditional weakness that an RSI would. So that is why I am wondering. And well, I wouldn't short this. It looks very tempting. It's fallen a lot. It's fallen from what? Uh, 380 to 180. Wow, what a correction. And after going sideways for 2, 3 years, it's just completely broken down. Could be somewhere support here. So I'm staying away. Then we have Gale. So Gas Authority of India. Pretty nice move today, but no volumes. That is a concern. So this could be some short-term bounce. That's what you have to watch out for. in such cases. 410 and before that, well, all this is that 400 is a level that it will have to really, really break out of in order to do anything meaningful. Right. Mm. Hey, look at this. This could be a head and shoulder bottom in the formation. Left shoulder, head, and a potential right shoulder, which is there. So this is interesting. The head and shoulder bottom, right? Neckline is 400, and if it can break that, then you've got 40 rupee measuring implication for 40 is where it could go to. Again, don't get too excited. 440 is an excellent 10% return, but could easily take several weeks for that to happen, and that's definitely possible. Hmm. Don't see it so well on the weekly chart, but again, yeah, actually you do. The right shoulder you don't. Left shoulder is this, right? This is the head, and the right shoulder is still in the works. Um, When you see these doing a crossover on the weekly chart, that's definitely good. So gain potential, buy, right? So, but till the neckline breaks, uh, your wand, as a matter of fact, this the whole issue is on the one hand, you've got these bottom formations like this, or some really bullish formations like HPCL and BPCL. But the overall market is really weak, and what could that do to drag this down? So this could come back to 360 suddenly, and then if you go long now, you'd be a little you know mm, disappointed with that. A really question of how the overall market is going to impact this. So those of us who are more technically minded or statistically minded, you could do things like correlation studies, R squared, find the linkages between how the Nifty works and how this stock works, and then get a sense of what is the interaction between these two, and you can discount that and look at actually some pricing. Bit of a statistical analysis, not a bit, quite a bit actually for at least me. And on the basis of that, you could get a sense of what levels you are looking at, or remove that from the correlation. Let's put it that way. Or let's just put some factor in the correlation between the Nifty move and this, and then take a call. And things like beta and all that could be calculated, and you'd be better off to know whether this is a safe buy or not, right? Um, yeah. Then let's look at NTPC. Hmm. Interesting. Another energy stock which is doing nice Marubozu type candle, but lack of volume totally. What is going on? Something is definitely going on. There's no doubt about it. It looks like 130, 135 has become an important bottom. Uh, and from a long-term portfolio construction thing, this would actually be uh, something which is worth buying. But again, this just here is 1 year. You've got this sort of rounding volumes, big up move, consolidation. All right. So notice that again, this fall here happened on really low volumes, and there seems to be some buying going on, right? This is big volume, low volume consolidation, again, low volumes here, and then a pickup. Yep, for those who are patient, long-term folks, this is definitely something worth considering. All right, so this is NTPC. Very lazy stock, but can suddenly surprise. 145 is a big important resistance. Support is around 131, and once it can either break one of these two, that's when the next big move. From say 145 to 150, 151 is where this could suddenly move to, right? Okay. Hmm. Yeah, could easily target at 150. Only that 145 is an important resistance that will have to work out. Okay, so that is NTPC. And look at ONGC. Hmm. Please look if there's been any news or any announcement or something that has triggered all this today. Like I said, I haven't been reading papers much lately. Should start again. And could be missing something. 300 important multi-year, level, and it could just be a pure technical buy bounce here rather. Who knows? 450 sort of uh, lifetime high zone on this. Mm, hmm. Now, one thing is for sure, multi-year support, and if the support holds as it has today, then we could really be in for a nice up move on this. Mm, this up move, low volume, this down move, a little bit of a high volume, and then tough to make out. Can only say good support. You can trade with a tight stop loss on this. If it goes below 295, sell, but you'll have to be lots of patience to cross all this moving average resistance is 345. And once 345 goes, so we're talking about ONGC, then it could suddenly go to 370, and then that's higher levels, 400 also. Okay, but again, all this I think should be on one buy list as and when the market bottoms out. So ONGC multi-year support. I'll just put it that way. Then we've got Power Grid. That has also got a nice green candle today. Reva. And big pick up in volume. So what's going on with the power sector? Does anyone have any input, any information, anything? Uh, Whatever it is, hmm. Again, not a multi-year support, but a support nonetheless, multi-month. And it's bounced off that last month, May, sort of rounding bottom, 1, 2, 3, 4 weeks of support at 138, 139, and then it has come to 146. If it breaks 147 and very quickly to 150, 153 is definitely on the cards. Right. Okay. 100 with support, and then with support in that 95 zone also. Okay, anyway, we are far from that. But yes, this is interesting that all the energy stocks are showing some strength. Now, even if you put that as a sort of best fit line, then that is just on the verge of a potential breakout. And if it does, then I think 150 is quite possible. Volumes are definitely looking good. So that is Power Grid. Tata Power. Ooh, dropped. It's making lower tops, lower bottoms, and falling on lower volumes. Uh, no question of buying it. The only thing is, however, that it is possibly, wow, mm, 3-year low. No wonder it had a small bounce here. Volumes after this up move May, June last year on the way down have been sort of tapering off, but too early to buy, that's for sure. And we've got some other support here, which is at 59.60, and we are at 70. So that's still 10 rupees lower from where we are. It could partially buy, but I think just to wait. All right. So that is Tata Power and Reliance. So let's see how that is doing. Like I've been saying, been pretty bullish on Reliance, more from a structural reform thing that this company is probably doing. A lot of the capex is over and could be cash flow time for Reliance for next quite a few years actually. So what has it done this week? Weekly, nice green candle, reasonable volumes, that's for sure. Yep, going from strength to strength, in my opinion. It is just waiting to break out of 920, 930. It's got this whole cluster of resistances that it will have to work its way through. All of them, the short term, the long term, they're all sitting there. 920, 930 is how many years? Wow, 2010, 2011, all the way. So 6-year support resistance level that it is on, and on a big broad term, a very what do you say, multi-week basis, you've got a head and shoulder here on Reliance, right? Downtrend line definitely broken. This is the left shoulder, this is the head, that's the right shoulder. And we're talking about a measuring implication from 820 to say 920, 100 rupees. So 920 breaks out 1020 is the potential target on Reliance. Again, please remember that this itself is a 6 month uh, move. So this is not something that's going to just happen overnight. So let it take 1 month, let it take 2 months, let it take 3 months. We're talking about a good 15% move on Reliance. So any dip, use it to buy, hold on to your positions, be patient, and it should give you some good returns. Of course, again, if the Nifty does go to 7,700, then this could drop back down to lower levels, say maybe around 840. But I think that would be a place to buy it rather than sell it. Okay. So that's the view on Reliance. Then what have we got left? Banks, right? Yep. So Reliance. Reliance on the bottom. So now we come to all our banks, and that's the last sector for today. Oh, sorry, we haven't done metals, so let's do that. Tata Steel first. Okay, quite a bit of drama. Not only do we have three dark black crows, but we've got a spinning top today, and still very bearish, no doubt about it. Just wait and watch because this is broken the support line, this bottom at this point, and well, that could be a resistance now at 350. Not could be, it is. And if it breaks that, then we're looking at well, 300, and then after that 260, right? 260, 270 levels could go all the way down there. So that is yeah. I would say short this with a stop loss of around 323, 325, and the first target would be of course 300, and then 285, and then after that 270. Okay, so that is Tata Steel. Then we've got Vedanta. I still don't have it. And then we see, ooh, what happened? Big fall. And then we see. So one of the things fundamentally here is that all your, of course, commodity prices are just getting weaker and weaker. So this is definitely looking quite bearish. Okay. It could go to all the way to 110 also. So this week has really been bad. You can see the sell-off from 130 to 116. This is like extremely sold and sort of just a bounce. Could be a dead cat bounce and then setting itself for lower levels. I would not be surprised at all if 110 comes. As a matter of fact, this bounce is perhaps something good to think about shorting. Stop loss for the short 122, 123, and first target would be 110. Right. Okay. So that is NMDC. Let's look at Jindal Steel. So metal just broke down their supports mercilessly. All these green candles that you're seeing here are just what? Wow! Look at this. This is back to its 2008 levels. Amazing fall from 750 to 100 rupees. Can you just beat that? Oh, right. Psychological mark. It is at 100. Question is what happens here. So you've got the promoters in trouble. You've got issues with the coal block. You've got all sorts of things going on. Technically, this could just be a bounce, and 100 is a level that it may sit on for some time and not really break down, given its sort of. So in 2004, the stock was as low as 18 rupees. 18 rupees stock has gone to 750, and it has come back to 100. And well, why can't it go back to 18? Who knows? So I would say, watch this on a bounce. All the way to maybe 120, 125. Put time to short. By this time, it will really be. I think just stay away from this. All right. Okay. Dalco 130 should have broken. Yep. So well, yeah. If you had taken that last time's thing about buying the 130 call option, you have definitely lost money, no doubt about it. On the other hand, if you had done the long straddle that was also mentioned, you should have made a good amount of money with that, right? So 130 is, let me just put that, multi-year support for that, as you will see on the weekly chart, right? So that's the weekly chart all the way from 1994, and you can see 2004 to now. It's really an important level, and the way it's broken that is like you definitely qualify the blood bath. But now here's the thing about metals. Clearly downtrend, absolutely no doubt about that. But the volumes is what is the big issue here. The volumes are showing this big decline. Right? This downtrend is not really sustainable, and we'll have to see how this pans out. Are we going to stop at 100? Are we going to stop somewhere? But that bottom is somewhere. Not sure where it is at all. Of course, nobody knows. But this is a dramatic drop in volume. We've got MACD. Nothing is showing you strength in the indicators, but this is a low volume sell-off. And for all you know, you could get suddenly a recovery like this. Look at this, 100 to 125 in 2 weeks. That 25% return. Those who are on the mentorship program and have been on the TMIP sessions, the most important thing, I think you might be onto something here, which is merits further investigation from fundamental, sectoral, global policy angles, and we might just be finding a good buying opportunity, right? So I'm saying that on the basis of this dramatic drop in volumes, so don't short. It could suddenly run back up. Look for signs of it bottoming out, and when that happens, think about buying it. Right, is what I would say. Okay, but again, with a lot of patience and strict stop losses. Then we've got in this place Coal India. Woo! Made the new life high, fantastic volumes first of all today, and yep, headed for its life high and should be held on. Once it's back beyond 420, then 450 at least should happen very quickly. No doubt about that. Been consolidating for what, 4 or 5 months now, and has done a breakout of that 400 mark. All right, and definitely on its way to 400, 420 next week. And then we would review. It's a question of patience in holding on to this till, it could definitely go much higher than this. Remember, the main, I think, agency for coal, there is this question of breaking up Coal India. There's been proposals already. And if that happens, then if you're a Coal India shareholder, then you will get baby companies out. And at that time, there could be this whole value unlocking that happened. And of course, the bill got passed about allowing private sector into coal mining, which is a big thing. There's only one big international issue, which is that as India looks to import or mine much more coal to support its energy needs, almost all the other countries are going the other way, including China, in shutting down coal plants. I think around Beijing they shut down some 13 or 3 or something. Just check last week or last month, coal burning fuel plants. And China is actually doing things now to reduce its carbon footprint, while India is expected to triple its carbon coal-fired energy plants from a multi-year, multi-decade perspective. And if pressure on that comes from international agencies to limit that, then suddenly things could change. But however, I think all said and done, this as a structural change is definitely something that you can look at investing in from a long-term perspective and trading also. Right. So that is coal. So actually some good ones here. So where is that? Coal India. Okay. So Coal India, Reliance, a lot of buys we've actually found. Okay. And then let's look at we've done metals. Last is pharma. And then we're done for today. Cipla. So Cipla, first of all, okay, so you can see very clearly a downwards trajectory, double top at 740 levels, and once it breaks this 200-day moving average, which I think it would, though the volumes have tapered off, but then where are we looking at this going? I think at least 600 psychological mark. It's rounded off, and then below that till about 575. So you could short this with a stop loss above 540, 546, or 640, 645. And yeah, not a great risk reward ratio, but could definitely pay off. All right. And Dr. Reddy's. When did I do this study on monitoring? It's so long back. Okay. So Dr. Reddy's 3,800, and then corrected like any other pharma stock, so nothing specific to it. 3,300 is an important support, and once 3,300 goes, then you're looking at 3,050. I would let's see, not be too aggressively short on this. You can watch, it's still got some strength. Let it break 3,300, and then you can short it to 3,100. Otherwise, it's still in a long-term sort of bull market, and this could just be a correction before it actually moves up further. All right. Then we've got Lupin. This, what happened to Lupin? So big, massive volume. Now, something tells me you should Just not short stocks like this. Just to stay away. Nice support at 1700. Actually, might want to think about buying it. Um, there's a gap here. Got closed the very next day. There's huge volume buying here. Just sort of digesting those gains, and then it will set itself up for the next move to most likely around 1900 and then 2050 and higher. Right. So that is Lupin. And then we've got Sun Pharma. So we have a gap in Sun. That's where the gap is. Need to keep watch on that. So after multi-year run-up, almost I think 1 or 2 decades, come to a temporary halt, I would say. So that was the important support area, 925 has broken down and then has come. This would be a good support zone at around 800. All right. But I think pharma, if I'm right, is always pharma, auto fundamentally very overpriced. There is another window which has not been closed. This level where it came to here didn't really close the window fully, only half, and then we had this further breakdown. So that's sign of weakness which is persisting, and who knows, could be seeing much lower levels, especially if 800 breaks, then it is an immediate short after that. So watch out for this level. Don't do anything in Sun Pharma. Watch 800, and if it breaks down, then you should quickly sell it off to 650 levels as the next support level. Right. Okay. And then, yeah, that's it. Cool. So we've come to the end of our Nifty stocks. We will take leave here tonight. So essentially, just to wrap up, so what I have here are all the buys. Actually, didn't make a note of. Okay, some cement is there, some pharma and all, but somehow caught my attention. Got caught this session by a surprising number of buys that say Idea, Airtel, BPCL, HPCL, K, Gale, Reliance Coal India, and all the other. Oh, so I totally forgot. We didn't do banks. Sorry. What? How can we not do banks? So Axis Bank going sideways, definitely showing relative strength. I would say. Bank Nifty not doing very well, but Axis Bank is definitely. And in any correction at a lower level, it would be a buy. At this point, it would be best to wait till it comes to 520, and then 590 is a good resistance. Okay, then Bank of Baroda. So after this super duper move it did here, uh, really not doing much after that. very unlikely to break 145. Looks like whatever caused that big move. Uh, I haven't looked for it, but still, at least I haven't come across any news on that. Uh, but if there is a banking stock that could be only for technical reasons, being a buying opportunity, then if this is one that you could consider in the private public sector space. Stop loss below 155, but massive resistance is all the way to 175, 180, and then after that only we would have to take a call. Okay, then CFC. So coming back to its support level of 1150, as you can see. Life high there, 1300. Definitely on a downtrend. Hmm. 1150 looks like the support, and yeah, all the event risks are more or less out, unless the government of India puts some pressure on the banks to do. I don't think any of these bigger banks will oblige, but public sector banks might. This is a good support around 1174. Might actually be a good time to sort of buy it, but then okay, let's leave that. HDFC Bank, almost the same picture as HDFC, as you can see. Really didn't have much of a sell-off after RBI policy, these ones at least. Right? So looks like the banks have done relatively okay. This is how I think the market has given this 1,000 rupee title, a four-digit stock, and could take support there. And yeah, good slow recovery from 950 to that. It could be on its way back to 1150. Just have to look at the overall banking. Yeah, this is definitely worth buying or considering buying. 1,000 stop loss at 992. First target 1050, and once 1050 goes, then 1080. After 1090, 1100 goes, then definitely much higher levels. Right? Okay, so that's HDFC Bank, then ICICI Bank. Ooh, this one fell. What happened? So some banks, and that too on good volumes. If 280 breaks, then easily 250 for starters. So what is going on? I mean, this is bank specific stuff now, right? Something is definitely cooking. It will be worth investigating. Why did ICICI break down, but HDFC and HDFC Bank didn't break down? That's definitely interesting. No doubt about that. If 280 breaks and one could, and that too on high volumes, 295, 300 would be a really good uh, support. Now it will be a resistance. If it comes back to 300 on weak volumes, think about shorting it immediately. And once 280 goes, then 260, 250 could be definitely be possible. Okay. All right. That's interesting. IndusInd Bank, so that as well looks like they just like HDFC Group has. Best to, I think, stay away from the iffy ones, neither here nor there. Mm, could take support, could bounce up with a double top at 950 on this end, and that will be the one to watch out for. On the other hand, 770, 780, if it comes there, then watch out for support there, and then we'll review. Right now, in sort of no man's land. Kotak going sideways for several months. Mm, all right, so that is going to come to a decision, I think, in the next few weeks. It's actually consolidating. Uh, you can also see that trend line to watch out for sort of double, triple top, and at this point, we've got that level. So a sort of symmetrical triangle. But you know what? In the broader picture, between 1300 and 1450 is where this is right now stuck, and 150 rupees this way or that way. So either 1600 is a target, or 1150, 1200 could be the target. So you just have to wait and watch and see which way it goes. You can very clearly see the volume just tapering off. You know, just wait and watch from the market. So when the market is doing that, we have no business doing a prediction. Just leave it on Kotak Bank. Right. What else? PNB. Very interesting. PNB. What was interesting was PNB, can't see it on weekly, but on daily, very clear divergence. You've got that, and you've got that. Okay, that's the bullish divergence, no doubt about it. And it's coming down now on lower volumes. One 45 multi-year support. I'm just wondering if I could might just hold the support here. Interesting to watch. This week has been bad, but volumes are really, really pathetic, and this could be on the verge of a bounce. This is interesting. You've got things like PNB, you've got things like Access, you've got things like so the other one I'm forgetting, which are good buys, and then on things like ICICI, which are just doing the other thing. And this time there's no separation between public sector versus private sector. This is just a mix, and there could be very bank-specific things that we are not aware of, but whichever way you look at it, and then today, low volume, look at 140. If 140 holds on PNB, it could be a good place to buy and accumulate, but just wait for that. It's too early to say anything. good support. See 150, 140 low zone from 2013 also. And it's a good support even in 2008. That was its life high. So it's like on previous life high that it has come back and it is testing. Hmm. Interesting. SBI. So State Bank of India. Trying to see if we're doing something like PNB. No, it's definitely much stronger. Okay. But B great candle this week. Slightly higher volumes. That's not a good sign. Would mostly be a short. So this is again very curious. PNB is perhaps a good buy, but SBI is looking like a good short. And it's also broken this, or it is at a very important support. This will be interesting. A lot of interesting drama in PNB, I must say. 255. Watch. State Bank of India, 255 holds could be an interesting buying opportunity. Otherwise, 280, 285 is a important resistance to watch out for. Mm, all right, so it's clearly a rectangle between 290 and so you could have a very low risk trade here. So you buy PNB with a stop loss below 250, yeah, 248, 249, and if it goes back up even to 275, there's a 25 rupee up move with a 5 rupee loss that you're talking about, 6 rupee loss. That's really a 5 is to 1 really good trade. And if it goes back to 290, then wow. So that is definitely interesting. Hmm. Okay. Hmm. Okay. Wait and watch on this. And finally, IDFC. IDFC could be coming to a 138 zone where it definitely has some support. Hmm. There is a big candle hammer type here, but no confirmation at this point. So we'll have to just watch out for that. And that is out of 140 is from 2009 onwards as 140, 150 as a support zone. And could very well take support there. Remember that the IDFC Bank is doing a soft launch this month, I think, June. So they have really put things together very well, quite fast. People, processes, technology, and a lot of drama in the last 3 weeks. So this is a hammer, another hammer. We've got a sort of inverted hammer. One could think about buying it with a nice stop loss below 143. If that confirmation has not happened, but once it can somehow go beyond 154, 155, and very quickly to maybe 167 also. could be a level 2. Watch out for. Could be a place to accumulate this. Yeah, let's set. I think we are now done. Yes, we are. Okay, super. So closing for the day. I'm going to stop the recording and just have some announcements about tomorrow's indicators class. All right, so thank you. So just to recap, some really good surprising buys, very good convincing ones actually. So sort of a split market. Again, I think it's a sort of conundrum as to which way the market will go. 7,700 doesn't look that sure anymore with the amount of longs that we have found on some really heavyweight stocks. But all said and done, this is still what, 1, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Maybe about 15 to 20 potential buys, of which I would say 5 to 10 are really good. So the bias is still clearly overall negative. I would say there are some selected shorts that you may want to track, and then look out for bottom out opportunities at whatever lower levels if 7,700 happens, and then keep this watch list of stocks to go long on. And as soon as that happens, then just you know um, uh, buy and get into the stocks. It's a 15% correction from 9,000 is a pretty good opportunity to get into a secondary trend, which could go up by another 10, 15, 20%. Who knows? Right? Okay, so with that, we end the session. Thank you and good night. Have a good weekend and have an even better week ahead.